Well, thanks so much for tuning into this earnings conversation. And we are in conversation with Mr. Bharat Puri of Pidilite to talk about how the quarter went by for them. What is the experience in the first 45 days or 43 days to be precise of the current quarter as we look at unlock, maybe 2.0 or 3.0, however you want to term it. And what is his outlook for the quarters ahead if indeed we don't get hit by a wave 3? Mr. Puri, great having you. Thanks for joining in. I hope all is safe.
All well, and thank you for having me, Neeraj. Always a pleasure to be here.
Thank you so much, sir. So let's talk about the quarter. I mean, you obviously have your numbers are much ahead of what the best of the street estimates were. Would you have thought of the same when we were hit in April and May by the devastating wave? And are things looking much more on the mend as we unlock in the months of July and August?
In these times, Neeraj, really, you have to take it pretty much a week and a fortnight at a time. I think this first quarter has actually been a tale of two parts. The April and I think the last 15 days of June were robust, and in fact, the bounce back was good. May, pretty much, we had 75% of the country closed. In the first 10 days of June, you had large parts of the country closed. Having said that, I must say, when we look at the second half of June, we look at July, we do see a robust demand recovery, and therefore, subject to obviously there not being any famous third wave, I think we would be cautiously optimistic on demand conditions going forward. It does appear that there is some amount of pent-up demand, and as markets open up, we do believe that at least the second quarter and the second half portend well from a growth perspective.
Okay, I'm just finishing the quarter for a bit before I get to the other pieces. When I looked at I presume what you're trying to say is that one, the small sales momentum YOY basis that you saw, QOQ debatable of course, but YOY, this momentum that you probably showed would continue. What about the operational metrics? Combine that as well, because I saw a bit of a dichotomy there in that gross margins certainly contracted, but the EBITDA margins did reasonably okay, if you will, compared to estimates again. What happened there?
Sure. See, addressing the margin question first, as far as margins are concerned, we had actually signaled even in the last quarter of last year that we're seeing unprecedented rises in our principal raw materials. Just to give you an example, our largest raw material is VAM, vinyl acetate monomer. Last year, our average buying price was $900 a ton. In quarter one this year, it was $2,000 a ton. So we've seen massive price increases. It's the same in epoxy resins, etc. When we looked at the underlying reasons, a large part of this was due to supply constraints rather than demand. There were these famous US storms. There were some factory closures in Asia. Because US closed down, Europe started buying from Asia, and you had this unprecedented rise. We are seeing some softening now in August, for example. Spot prices of VAM are down to $1,500 a ton. Now, for us, as again a player who is not looking at just quarter by quarter, but the longer term perspective, we therefore were clear that, listen, we will price at 75% of inflation and keep a close watch. So we do see that our margins will remain under pressure in the first half, in quarter one and quarter two, because quarter one, what you bought in quarter one, you will consume in quarter two. And it is in half two, in quarter three and quarter four, that you will see, gross margins return to our normal levels. This is something we had planned. We don't believe that we should be passing this on to the consumer in the short term, because it will actually, again, impact volume growth and the recovery. And as long as, on a longer term basis, you are growing volumes substantially profitably, that should be our objective.
Okay, so before I get to the volume picture as well, just a quick follow-up. What is your sense as you think about what the raw material pricing could be with the supply side situations at some point of time becoming normalized? Are you in that camp which believes that for your raw materials, maybe FY23 normalized pricing could be the case, ceteris paribus?
I don't think it will come. See, remember last year, I mean, if I compare to year before last, I think it will come back to what was normal, because that was the normal time when there was no COVID. Last year, because of demand, etc., we also got a massive benefit because prices really crashed because pretty much the world was closed. So we do believe that they will not come back to last year's levels, but hopefully they will settle somewhere close to the year before levels, which is what we have planned for and which is what we are ready for.
Okay. Okay. What about volume growth, Mr. Puri? As July, what is July and August showing you? I was speaking to so many market experts and people who looked at all the con calls, and everybody seems to suggest that there are two distinct conversations. Companies that everybody spoke to before May 15th were all pensive about how Feb was great and this was bad. And companies after May 15th are saying that, hey, April, May was so bad, now things are looking okay. What is your assertion?
Definitely. As I said, demand conditions currently, I don't think we have too much to complain about. Yes, it is the monsoon. The monsoon is for a lot of categories, not the main season. You know, our biggest quarters tend to be the first and the third quarter. Having said that, I must say the demand conditions are robust and, you know, again, barring any unforeseen closures, hopefully they will continue.
If I look at the console piece, Mr. Puri, the consumer and bazaar segment, as I look at the numbers, revenues were up. Segmental EBIT grew quite strongly, much higher than the revenue growth as well. Can you talk a bit about the segmental performance, and where do you foresee some challenges, if at all, and where do you see tailwinds going into quarter 2 and quarter 3, or rather going into quarter 3 midway through quarter 2?
See, if you look at our B2C businesses, they last year sprung back much better than the B2B businesses. Absolutely so, because factories in a lockdown were absolutely shut. So there was zero consumption, whereas at least rural and small town India, etc., was open. Having said that, they've sprung back, therefore, stronger in the first quarter of this year. But going forward, if you look at the demand picture, actually, we are seeing robust demand both for B2C and B2B. Especially export-oriented industries, we are seeing also, you know, good, robust demand. If you look at our international businesses, Neeraj, you would see that we've more than doubled our international business, and the international business did not suffer as much as the domestic businesses did last year. So actually, even over a normal, you know, 1920, we're actually growing our international business, which actually says that our strategy is working. And despite, you know, minor closures, we're back on track and we're actually growing even on normal basis. So as far as we're concerned, if you look at the domestic picture, metros have sprung back the fastest, but understandably so, because metros suffered the most. Really, if you ask me, the silver lining is rural and small town India. Last year, we had substantially invested. We felt this is an area that is doing well, an area which also had a lot of potential for us. So last year, we actually invested, you know, while people were cutting back people, etc., we added people in rural and small town. We added a number, you know, the whole infrastructure, whether it be the number of stockists, whether it be the number of towns and villages we service. So the great thing is this quarter, despite, you know, being closed for 45 days, our rural and semi-urban India sales is pretty much equal to what it was year before last, which just tells you that when there's a normal time, you've got great momentum. So overall, if I look at it, I would say if there are no closures, I think demand should be robust and we should be looking at fairly good demand conditions over the next 3 to 4 months.
Okay. Last couple of questions, Mr. Puri. One is more specific, a bit on Huntsman and Pidilite adhesives, and how do you, how is the, I mean, the growth will look large if you include Huntsman, right? Because there's probably this base effect at play as well. But stripped of that, how is that looking per se? And also a word on the international subsidiaries. How did they do? Because as I had made notes the last quarter, if I'm not wrong, there was a decent about 25% growth, if I'm not wrong, YOY from those buckets in Q4. How is that shaped up this quarter?
So both questions, as far as Huntsman is concerned, even if I take out from the consol figures, the Huntsman figures, they're not substantial. You will still have very robust growths, which will be for both the consumer and bazaar businesses as far as India is concerned. The Araldite business is a business which we see great potential in. We've also started extending that internationally. We have launched in Bangladesh, we've launched in Nepal, and we will be extending that. It's a business we see great potential in, and you would have seen, as now we report the results separately, and you would see that, it is a very profitable business that is growing very well for us. As far as international is concerned, that's been a story that continues well. We've grown our international businesses again at a very robust rate this year. Our international subsidiaries have grown at about 75%. Remember, they were not impacted the same way as domestic was. So as I said, this is growth not only over last year, but even over the year before. So the strategies we had put in place, we believe are beginning to give us the requisite outcomes that we looked for. And we've got good momentum there. So whether it's a Bangladesh or Sri Lanka, the Middle East, Africa, we're doing very well in Africa. We're seeing good substantial movement forward.
Well, that's good. I hope that continues. One final question, Mr. Puri, and that's on availability of talent. Now, of course, IT is the hotbed where there is a talent war. But when I looked at the numbers of a bunch of other companies, the managements have to say that while availability of manpower has never been a problem in India, in some niche pockets, skilled labor, the cost and the availability both is an issue. And for them, strangely, this time around, the employee cost as a percentage of sales was fairly high, and they anticipated it to actually expand going ahead. What's your experience been as you expanded into rural as well in a big way? And how do you see that unfolding? If not for generalized costs, then for specific buckets, could there be employee cost inflation for you?
See, I think employee cost inflation to a certain extent will be built into the system. But in our belief, Neeraj, any good company, especially a company like Pidilite, we are about three things. We are about great brands, we are about great technology, and we are about great people. And if therefore we want, best-in-class talent, then on a consistent basis, we will plan for it. But in my belief, it's not cost alone. It's all, cost attracts people, but culture keeps them. And hopefully we're building an enabling culture. If we're building a culture which is truly what we call pronorial, the mix of professional and entrepreneurial, then we will continue to attract high quality talent.
No, which I'm sure you already are. I'm just wondering if a combination of, I don't know about attrition really, but a combination of attrition come lack of availability, could that push employee costs higher, or you think that is not a concern in your industry, in your company?
It is not a major concern. It is in certain areas. For example, take the area of digital. Now, digital is on fire. Every company needs to have a digital strategy, and the number of people are limited. Good R&D people, for example, will always be at a premium. Good marketing. So, to my mind, any organization will have to build its talent strategy based on, a war for talent and an enabling culture that keeps them.
Okay. But obviously, nothing too critical is what I gleaned from your answer. Great. Yeah, Mr. Puri, appreciate you taking the time out and speaking to us. Good quarter, congratulations. And I hope the momentum of sorts continues in the quarters to come.
Thank you so much, Neeraj. The congratulations is actually to the team. The orchestra conductor tends to get the applause, but they're the ones who are playing. So I think they deserve the credit, and always a pleasure to be with you.
And that's a sign of a good leader as well. So thank you so much, sir.
Thank you. Thank you so much.
Cheers. And viewers, thanks for tuning into this conversation.